Welcome to the ARMR Report Day Trading Way. This is a video playlist for you of the day trades that we make on the ARMR Report trading desk every day. And I'm going to share them with you each night so you can see how we use ARMR algorithms to execute orders throughout the day in the big indexes and in individual stocks as we go. Okay? So without further ado, let me remind you, my name is Brett Rosenthal. This is a show about quantamental investing. It's the combination of quantitative execution, which we're going to spend a lot of time talking about today using algorithms, and a fundamental foundation. And that's the information edge I'm sharing with you every day. I've been doing this over 30 years, and what I'm trying to do is share my successes, my failures, and let you know through my own experience how to increase net worth and protect capital. That's what we're all here to do. ARMR stands for Algorithmic Risk Management Research. So we protect capital first, capture upside second, and I'm going to share with you how we did that on the trading desk today. Subscribers, which I call insiders, ARMR insiders, are on the ARMR Slack trading desk with me all day. And so what we do is I share this information as it's happening so that insiders can see how to position their portfolio throughout the day. And so we begin our day trading process by looking at the indexes, particularly the S&P, which will be long, and the Nasdaq and the small cap index. The Nasdaq will be long and short. The small caps we only short. Okay? And then from that setup, we'll drill down and look for individual stocks using our whiteboard, the fundamental part of our research, to determine what stocks we want to trade on the long side. So what I'm going to share with you right now is a screen of, we're going to start with the S&P. Okay? So what you're looking at is the ARMR algorithm that we like to call the Price Movement Profiler, or the PMP, the ARMR PMP. And we use all of these lines, Fibonacci extensions, volume weighted average pricing, standard deviations above and below the mean. All of this is part of the ARMR algorithm. All of those tools we've infused with a volatility component. Okay, that's the secret sauce, if you will, that we've written into our code to help us find the right levels to book profits, to put on shorts, and all those kinds of things. I'm going to show you how we do it. This orange dashed line here and here, this has to do, it equates to options information, or gamma, okay? And when we find gamma locations that coincide with ARMR PMP locations, we have the highest probability of success on a trade. That's what we're looking to do. So this morning, you're going to see right here, okay, on right in here, we see the gamma location was around 342 on the S&P. And I shared this information at 8:30 in the morning with all of my ARMR insiders, so we're ready for this. Market gapped right down to gamma at 342. We tried to rally up. When it failed, and we break below the VWAP, which is this black dotted line here, okay? And we close below gamma at the same time. That was the time to get short the market. Okay, now, we don't short the S&P. What we like to do at that moment is short the more volatile indexes. Oops. So what we're going to do is take a look here at oops. Okay. What we're going to do is take a look at the Nasdaq 100. So you could see this morning, again, right around these gamma lines, the market peaked right there and right here. And when that coincides with a break below the ARMR VWAP, the volume weighted average price as computed by the ARMR algorithms, okay, this is the price to go short the triple Qs, which we did. And you can see a pretty significant sell-off. And we ended up booking our profit on this trade right here. Okay, that was our final exit. We booked some profit right here. This line right here is the ARMR ATR, or average true range low of the day. Statistically speaking, these indexes will stay in a range. All right, so we always book some profits there, and then we use a trailed stop the rest of the way, and the trailed stop did not get taken out until right here. Okay, so let's go look now at the small cap index, because at that same time, we're putting on the same trade. Now, what's interesting in the small cap index is that it was in no man's land from a gamma standpoint. The support, the gamma support is way down here. I mean, like, forget about it. Way down here. And if I pull this screen down a little bit, the resistance is all the way up here on gamma, which is 163. So we gapped down from, notice how the night before we closed right at the gamma location. I mean, it was incredible. It traded there most of the day yesterday, right? Broke, gapped above it, sold off, went right back to it. Gamma is a magnet. Write that down in your captain's log, okay? Remember that. Start to get used to that terminology. We gapped down below it, so it's in no man's land here, and it's incredibly weak. We know that gamma support is way, way down here. I mean, it was, forget about it, way, 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 way lower. Okay, so what we do when we're shorting, we see the S&P break down, and we see a breakdown below the ARMR VWAP. That's where we get short the small cap index. Actually, we did it right here on this bar as it broke below the opening range low. And of course, a beautiful trade all the way down here, which we get taken out right in here is where we get taken out. Whoops. Whoa. Okay, so right in here we get taken out. And once again, we book some profits right at the ATR low of the day. And notice how the stock tries, the market index tries to stay above the ATR low of the day. Then it fails right here, keeps trading lower, and we get stopped out as it's breaking above the first standard deviation below the VWAP, which is right here. Okay, so those are the three trades we had today. Very successful three trades. Okay. We actually started today long the S&P. So let's go over that for a second. And maybe I should have started there, but let's go over it now. Okay. We gapped down to gamma. Let's take a look at it. Okay. Again, gapped right down to gamma, which was the opening range low, the ARMR opening range low. We went back above the VWAP. We always get long a day like that. When you gap down to gamma and close back above the VWAP, we put a long trade on with a stop right below a new low. So as we got stopped out right here of this trade, we were getting short the other indexes. And we made more than 5 times on our capital on the short trades than we lost on the long trades. Okay? 5 times as much. So we never mind putting capital to work and taking a tight loss so that we can open ourselves up to a significantly bigger gain. That's the ARMR Day Trading Way. If the long position fails, it usually means you're going to get an aggressive move lower. And so we can put on aggressive positions for that short trade, and that's what we did. So I hope this was helpful tonight. Every time we have trades like this, I'm going to come on here and share it with you on this YouTube channel under the playlist ARMR Day Trading Way. And so over time, you can learn the process of how to get yourself on the right side of probabilities and statistics over and over again on a day trading level and on a long-term level. We use these tools to put positions on that we will hold multiple days. Okay? So if we had had the right setup this morning, right in here, if this trade had worked on the long side, okay, we would have had a list of individual stocks we would be buying. And if we had a nice trade throughout the day, we might hold them overnight depending on the market environment. And that's how we put capital to work. I hope you found this helpful. If you have any questions for me, don't forget to comment right here in the questions section, and I'd love to get back to you on it so that we can make this session about trading and day trading as informational and educational as it could possibly be for you. So thanks for your time today. I'll see you guys on the flip side. Take care.